Here. Hope everyone's doing outstanding. Monday, May 12th, 3:20 on this fine afternoon. Talk really quick about the market. Some names I'll look at. Go from there. S&P monster session, monster rally for all the indexes today. So uh, yeah, up over 3% again here. Impressive stuff. So it's funny. I did I put that on there? I don't think I misspelled it, didn't I? Huh? Sorry, folks. I um I use Market Watch a lot of times, and Market Watch is all under the same umbrella as the Wall Street Journal, Barron's, um, and I use it kind of like as a proxy for the market, like the similar to like the inverse Kramer thing, right? Because it seems every time the market rallies, it's you read all the headlines and they're all most of them are negative. Curb your enthusiasm. Don't get too excited. All this stuff. And I, I mean, you probably should curb your enthusiasm anytime there's a rally. Just so it doesn't. It's just it's just they remain steadfast. And here we are over 100 points off the lows, uh, early April lows for the SPY, right? And by the end of today, we'll be out of bear market and technically speaking, 20% off the lows at a bull market, right? So pretty remarkable stuff. It's just where do we go from here, right? Is this the start of a next leg higher? Are we going to chop around? I mean, earnings season has been great, right? And then the hard data has been great. So it's just a matter of like, what do these other deals look like? The EU, the Vietnam, all that has to, and Mexico and Canada, that all has to get resolved. And the meeting with Canada went well last week or the week before. So uh, I think once those deals come out, there's more clarity, or at least the more blueprints. Right, we already got the blueprint with the UK deal, and then now with China and the US over the weekend. And as more of that comes out with at least some clarity to remove the cloud of uncertainty, I think that bodes well. And there was a nice article, I think I linked in a Wall Street Journal this morning, and some I always read, like I always talk about, well, not recently, but I think it's important to read all views, right? I try and read all different publications, not because I might not agree with them, but maybe I'll learn some from them, and maybe I'm wrong, right? I'm not naive enough to think that I'm not wrong, right? I think it's important to know, or at least to be open to being wrong. But otherwise, you're going to be like Hussman. What's his name? Whatever Hussman. I never reply to his stuff on FinTwit. He's a perma bear. But just last week, you would think financial Armageddon's coming. This guy's always bearish. UPB he posted tons of stuff on it. But you have to have an open mind, because otherwise you're buying puts and you're looking great, and then it's 481 on a SPY and you're loaded to boat, right? You took out two mortgages, a second mortgage, you levered to heck, waiting for the next shoe to drop, and boom, we go on the huge rally, right? So just all right, rants for other days. But I talked about it on Watch This morning in a rant 580. We actually broke under 580 in the morning. You had POTUS come on, talk about the China deal. Then he talked about the historic price cutting executive order that he's doing on pharma. And then there was a lot of questions, all the kind of the same questions, nothing new, And then he talked about what happens if there's no deal. Do you see tariffs going up to 145%? I mean, like I was saying a couple of weeks ago, it's like an embargo, right? It's like a trade embargo. It's like you park your boats in front of, uh, you know, think of all the crisis. Was it the Cuba Missile Crisis? I forget. Did we have an embargo on Cuba? Just you have boats. The ports are all closed. You can't do business. It's just how it is with 145% tariffs. Even 30, 80%, you have to think is crazy, right? And I wouldn't say crazy. I shouldn't use that word. Just not manageable. But you start getting down to 10%, 15, 20, maybe that's somewhat manageable. And then you think it's in lieu of trying to get, you think that's a price increase of 20 or 30% on the US consumer. Maybe the person, the company who's selling the product takes 15% of the cut on those tariffs, and then the one who's exporting it from China takes 15%, and it's an even Steven deal, and the US consumer doesn't get any price increases, and it increases trade. And so there's a nice piece in the Wall Street Journal this morning in regards to that hey, maybe this might help expedite China becoming more of a consumption economy, because they haven't been. They've been a building real estate economy and an export economy. They haven't been a consumption economy. So if some of that changes and this helps expedite that change, maybe it's the next leg in the global growth. So rants for other days. So anyway, 580 on the SPYs, got back over the 580 handle. I think that bodes well. I would love to see 590 this week. I don't know how much. Well, first we got to get through CPI data tomorrow, right? So if the bears are they're already still there. A lot of folks still don't believe that, hey, we can head higher here. They think the damage has already been done. This is just a relief bounce before the next leg. And then CPI data will certainly give them more ammo tomorrow. So not saying that we could tumble 2% tomorrow, but I do think if it's much higher than expectations, it could be a rough day tomorrow. So red, maybe 578 or 577, somewhere in the SPY. So with that being said, just a little cautious heading into tomorrow. But if CPI comes in flat or lower than expectations, right? The last CPI data was the lowest in whatever many years, so pre-COVID, then, well, at least on a month-over-month basis, I think, or year-over-year basis, then I think that kind of sets us up for 590 into the end of week. So I think it was this time last week that we were ending the 9-session winning streak on the S&P, and we had weakness. I'm like, I think the S&P the SPY could test 570, and sure enough, we did. So gonna have to see what CPI data does tomorrow. All right, so that's kind of the overall market, and then you know, also in regards to the momentum, amount of stock trading over there, 200-day moving average, that's back over 50%, trending in the right direction, and then there's over 70% of stocks in the S&P are trading over their 50-day moving average. I mean, that's like bullish, right? I mean, the last time we were at this level was early December, so pretty impressive stuff. All right, so that's kind of that. Just individual names, and first, yeah, I had it on the watch list, and at the time, biotechs were actually in the red. But I talked about looking at some of the mega cap or at least biotech names that have been destroyed over the last 2.5 years, but some more so over the last year as well. And Biogen's one of those names, Regeneron, VRTX. Well, VRTX not so, but just on this pharma news, and I thought maybe this finally could be the bottom, or at least even if it's a short-term bounce. So once we got the reversal at the open, I went and looked for some names, and Biogen's kind of like under the radar. I wouldn't say under, but doesn't have a lot of volume anymore. There's not a lot of people looking at it. I think, wow, this. You look at a chart, I'm like, I don't think it will take much for it to get back over 130 bucks. Those calls looked inexpensive on a risk reward basis, so grab those weekly strikes. If it shows continuation tomorrow, don't be surprised if I add more strikes here. It's at multi-week highs today. And you look at a sell-off since the end of March, it was 140 bucks, and that was pre-Liberation Day situation. So I think there's an opportunity for outperformance. That's why I got those. And then Roku. So I mean, here's a name I wouldn't say mind boggled, but when it was selling off on the tariffs, I'm like, people don't understand the story because it's not like it gets 99% of its revenues from TVs produced and imported from China. That's a minuscule amount of their revenues, and it's a negative margin. It's a margin drain on their business. But that was always my thought. And then people are like, well, it's because the market's pricing in a recession. I'm like, okay, maybe that could be some of it. But now you're removing a lot of that or possible headwinds. And I still have the freebie strikes from earnings that expire Friday. I don't want to be in a spot where there's M&A or the stock has continuation. So I went and got some inexpensive calls into next week, and I might look to get some more strikes further out if it breaks over 70 tomorrow. Just because my thought on Roku, the business has not changed, right? I mean, the way folks consume media on television is not the same it was 4 or 5 years ago, or even last year. So, and Roku's one of those platforms that are front and center. It's just disappointing to see their earnings this past quarter. But nice move so far. So I'll hold those. That's the thought process there. And also, you take a look, it's over its 50-day moving average, 67 bucks. The 200-day is at 72.53. And then you have the backdrop of possible M&A, which has been there for quite some time. All right, so that's Roku. And then I got some Walmart calls. I was fun to watch this as well. They have earnings on Thursday morning. I was hoping for some premium bills. So when the market opened, it was kind of flat, Walmart. So I'm like, maybe it's going to have some overshoot. You have to think if there's companies that have possible concerns, possible empty shelves, possible much higher costs, issues getting products, things like, and tariffs being the catalyst for it, you would think it was Walmart. And they had their investor day that kind of alleviated some of the concerns. But I thought the China deal would spark shares, and that wasn't the case. It's still trading red here, but I still like it into earnings. So the thought when I got the calls this morning was that it was going to rally for the rest of the day, and it hasn't done that. So premiums are down, unfortunately, but I'm still going to hold them, and hopefully tomorrow we get some follow-through. CPI data comes in flat or better than expected, and then it could start working its way up near 100 bucks. Because I think as we get closer to Thursday, I'll be able to close them all out to cover costs. If I don't get that chance, I might hold the calls into earnings as a binary trade, but Haven't decided on that yet, but that's kind of the thought process there. Then some other names. I mean, VKTX is up 4% today, but the rest of my May strikes are in the red, so that's kind of frustrating. I don't know if, again, this similar name that has possible M&A every weekend. VKTX is one of them. Or maybe folks were expecting volatility with this pharma announcement, but still looking for July and or June and or July strikes. The thing is, and like J Rock was posting in the chat room earlier, there's they have their phase two study. I forget what the name of the study is, but it's their oral GLP-1 13-week study. So the initial data that came out last year was like a 7.8% weight loss. So I think anything above that, and the stock's going to rocket. But again, this has been kind of one of those fickle names that even it had data back in the fall and it didn't do much after positive data. So maybe this is it that gets it back on track. So don't be surprised if instead of getting July, I might go get August, because the data's supposed to be out sometime between the end of July and August. So I don't want to be in a spot where I have July strikes and the premiums erode twice as quick as the days get closer to expiration, because people are pricing in that there's possibility they announce that and they don't. So that could be one of those premium crushes. I don't want to have that. So I'll probably look to close the Mays. Well, I'm probably going to hold them. And then as we get towards the end of the week, I'll start looking for later date strikes there. GPCR disappointing. Still had some of the 25s left. Hindsight, maybe I should have closed them out last week, but it's back under $25 here today. I'll just hold them into the end of the week, and then I might look for some other strikes as well. But that one was decent profits. I would have been much nicer profits. I had locked them all in. And another name. So frustrating. If you heard me on the rants over the last couple of weeks, I had like a three horsemen, right? The Wayfair, the Restoration, the RH, excuse me, not Restoration Hardware, and Deck. And the playbook, I could have just did nothing for the last 3 weeks and just got calls on Friday to play for the gap and run, and it would have paid off handsomely. You take a look at RH at points in the early morning. A lot of RH calls are up over 1,000, 1,500%. Same with the Wayfairs. I mean, I could just nibbled $40 strikes. They were like 20 cents. Those are they $1.80 now? I don't even want to look because it'll upset me. Right? Not upset me. It's good to know I had the right idea. It just upsets me that I didn't have conviction, but I can rationalize it. Like I already talked about this morning. If Trump didn't come out with that 80% baseline, well, he didn't call it baseline, but he said that sounded about right. I thought there might be a struggle over the weekend, and if any, even I, and I didn't even think there'd be the high probability of a pause. So because of that, I didn't add some spec calls, but I was actually Wayfair. You look, 42.50 is the 200-day moving. Actually, it's 42.76. I'm not about chasing a move it's up 20, almost 21% here into the close. So maybe tomorrow I'll look for some strikes. And then so Deck, Deck was kind of disappointing because not disappointing. I don't have the calls, but if I did, it all the way up to 132 by 9:40 or so, and it's done nothing ever since. Big $8 dip until 10:30. It's been chopping around 125. So maybe there's more to this story. So maybe I'll probably sit on my hands on that one. But they report earnings next week, so you take a look what it's done. I mean, it could be a name that you look and like it might trade into the 150s and beyond if it has a decent earnings report. So that's it. Biogen's hitting highs here right now. So hopefully some follow through. Over the years, there's been some crazy trades on Biogen. I just haven't traded it in years. I used to trade it a lot back in the day, back when it was a well-functioning growth company. It's had some issues. And some of these names, like Regeneron too, is another name. You have all these, they have a big portfolio that you follow over a decade, right? And you wait and you watch and you trade these names. I remember when Regeneron was like $70, and I think it was $1 at one point. Regeneron went all the way up to $1,000, but without I don't know if they split. But needless to say, what happens? They have these, studies, and then it goes to FDA approval, and then it goes to market, and then they have this, have a patent window, right? And once that patent window starts to dwindle, then these stocks kind of mature. So that's some of the issues you see with Biogen and Regeneron. But I think Regeneron has a decent portfolio. But the spreads on Regeneron make it almost unplayable. That's why, in lieu of getting some Regeneron strikes, I got the Biogens, and hey, hopefully the Biogens pay out. All right, that's it, folks. Let's have a great day. I'll be back on audio later. Rock and roll.